Welcome, ladies and gentlemen, to our first educational podcast for from Alkandros International Trading. I'm your host, Constantine Kai Alkandros. This is our second podcast, technically, but our first that is part of our sort of educational group of podcasts. The educational podcast will cover a variety of topics ranging from the different products that we deal with to negotiation, to sort of study, covering the art of negotiations, how banking in international trade works, international trade itself, import, exporting, selling, human psychology, geography, things like that. What we're going to do tonight is pick one particular topic and sort of go through it with you and give you information about it, and just basically give you as much. I'll basically just try and tell you as much as I can about the particular product that we deal with in this podcast. So what we're going to cover tonight is gold. That is our primary product that we deal with. And gold comes in two different forms. There's the unrefined, less pure Doré gold, which is cheaper because it's less refined and pure. And then there is the refined and more expensive bullion, which is what Doré later becomes once it's been refined at the refinery. It becomes bullion. Once they take out the impurities in the metal, it becomes bullion, and then worth more money. Now, Doré generally it still has a pretty high purity level. Dorés generally sit at around 95%. So they can vary sort of anywhere between the low 90s to sort of the mid to upper high 90s. Bullion is always 99.9%, or as close to that as possible. As it's generally either pure or at least very close to full purity. So because Doré, of course, is impure, it is, of course, cheaper to acquire compared to bullion. And in the market for gold, you'll find a lot of demand. My experience, I've found there's more demand for Doré gold than there is for bullion, understandably, because bullion is, sort of what gold is kind of the end product of the end result of refining gold to its most purest point, and it's at its most expensive point. So generally you don't find a lot of demand for bullion. If there is, it's probably usually trade for bullion is usually probably done between major banking usually done between commercial banks. So they're usually done between major institutions. Not necessarily person to person. They can be, but it's not something that generally happens. Generally, it's Doré gold. The demand is for Doré gold, and there's a lot of demand from people who are refiners who want to refine it, turn it into bullion, and then on-sell it to make more money. So that's where a lot of the demand is for gold. It's in the Doré market, not the bullion market so much. Gold, there does seem to be sort of arguments as to how gold is bought and sold globally. Now, in theory, there are three types of methods for paying for that gold is paid for. One is cash and carry. Two is telegraphic transfer, which really is never really done. I mean, in theory, it can be done that way, but no one in their right mind would buy gold by paying a deposit and then hoping it gets shipped to you. So I mean, in theory, it could be done that way, but it's not done that way. I just thought I'd throw that in there because it is a payment method that could be used, but that isn't. And the one that, and along with cash and carry, the last one is a letter of credit, which generally is a standby letter of credit, which means that the buyer's bank will guarantee payment to the seller. So the seller is guaranteed to make their money when the gold is shipped. And if the buyer decides to balk, either reneges on the deal or generally turns out to be a scammer and doesn't have the money to pay for the shipment, the buyer's bank will then go after and prosecute the buyer. So this type of banking instruments favors the supplier rather than the buyer. Naturally, of course, if the buyer has something to hide and is legitimate, then there's no reason why they would not accept a standby letter of credit. So in my experience, generally, when people renege on standby letter of credit, there is a reason to perhaps think that they are not legitimate buyers and they are looking to scam you. But there are people out there who do buy gold from on cash and carry terms. Basically means they will go to the supplier and basically buy it from them in person and pay them on the spot. Cash and carry does come with problems. You might find that there can be risks involved with cash and carry. Risks might include issues with exporting the product. There might be export taxes on gold, and so you may end up paying more money if you have to pay by cash and carry. So there's a lot of hidden costs that come with cash and carry, and risks as well. Some of the hidden costs, as I mentioned, would be exporting it out. There'd be an export tax in some countries. There may be an export tax on the gold leaving it. So as you're leaving the border, you may have to pay export tax or export fees on exiting the gold, on taking the gold out with you. So if you don't know that and you buy from someone in a country that on a cash and carry basis, you may end up paying more. Other things could be as well is that there may be, embargo is not the right word, but there may be a ban on taking gold out of a country. I believe there was a country in Africa recently, I think it was the Congo, where all gold has been consolidated. So basically no one can go into the Congo and buy gold if they want. So that there's been sort of restrictions on that. So if anybody is offering you to sell gold, say in Congo, I think it's Congo, I'm not quite sure, but I do believe it's a Congo, then they're a scammer. So it's advised to know if you're going to do cash and carry that there are risks involved, and sometimes it's good to know if you're wanting to do cash and carry which country the gold is in, so that you're not going there and then finding out, oh great, well I'm there now, and now I didn't realize that there's a block on taking gold out. Just before I continue, I will show you just some pictures of gold. So the one that you can see right now is a picture of Dory gold. So this is what Dory gold looks like. If you can see, I'll try and maximize the image for you. That's what Dory gold looks like though, hang on. That's not what we want, but so that's another image of Dory gold up close. I think I have a picture of Bullion somewhere. I see that's sort of a bigger image of the Dory there. So that's in Dubai currently. Sorry, not currently, but that's a previous one that we've had in Dubai. So there you go. There's more. So that's not your typical bullion. Sort of what people think bullion is not always made in that sort of rhomboid shape. It can also come in small sort of tablets, or not tablets, but yeah, small plaques like you're seeing in this picture here. So it's not always in rhomboid shape like it is here. Oh, that's not Dory, that is Bullion, that's Dory there. And so these are other products we deal with, but we're not going to cover those today. So that's more Dory there. But cash and carry does come with more risk. So as I mentioned, export tax, if there are embargoes, for example, and you don't know, and someone offers to sell them to you and you go. Of course, there's always the risk of abduction, kidnapping. So you might go to some country, you agree to pay cash and carry, and then you get kidnapped. There's no gold. The supposed seller kidnaps the buyer and takes their money. There is another risk with that comes along with cash and carry. It's a bit more of a sophisticated scam. If I remember reading about this a while ago, I'll see if I can find it again in the future. But 'cause it was a very interesting scam. Apparently, the way the scam works, if I can remember, is, if I can remember, I think there's something about the buyer goes to the supplier to take the shipment. They make the exchange, and then some sort of story about they go into the bathroom and then they leave or something. I don't know. I'll have to read it when I find out. I'll let you know. But it was a very interesting scam the way it worked, quite sophisticated in comparison to some of the other ones. But yeah, there are a lot of risks paying for gold and cash and carry. But it's interesting enough, there are a lot of people out there in the gold market who will only pay cash and carry. They don't want to work with banking instruments. I'm not really sure as to why. It might be because they prefer just to deal business personally, face to face, maybe, which is understandable. They would rather have more control over the exchange than a bank, or leaving it up to someone else. But yeah, if you're going to do cash and carry, it does come with risks, and you've got to be prepared to manage the risk and lower it as much as you can if you're going to do it that way. Otherwise, like I said, SBLC is the best way to do it. The banks do the transaction, and you can't really go wrong. I mean, if the shipment is not up to the standard of the buyer, then of course the buyer's bank won't send the money to the seller. So there's safeguards in place for the buyer as well. There's not really much to say about gold as a product in itself. It is a metal, so unlike other maybe agricultural commodities that have lots of variety to them, gold is effectively just a metal, and your only specifications regarding it are purity of the metal, so how much gold is actually in the nugget, or I should say the bar. So bar is the term that's used to describe the gold when it's actually been after it's been melted down, and then it forms in whatever shape it is, whether it be a rhomboid or just a square block or a brick. It's known as a bar, although I do think brick is used as well. Now, the pricing for gold does change. It can change day to day, week to week, a bit like the stock market. And as I mentioned before, bullion is more expensive than Dory gold. Dory generally is about can be about anywhere between 5 to 15% cheaper than bullion. The London Bullion Metal Exchange, known as the LBMA, is as you can see here, the London Bullion market is a wholesale over-the-counter market for the trading of gold and silver. Trading is conducted amongst members of the London Bullion Market Association, loosely overseen by the Bank of England. Most of the members are major international banks or bullion dealers and refiners. So, as you can see, this is a website. gold is sold. Well, sorry, gold is the price is gold. The price of gold is sorry. So the price of gold is calculated per kilogram. So every kilogram of gold has a price. So it's done through kilogram. Whereas if you look at commodities, agricultural commodities, the price is determined per ton, metric ton. But as you can see, this is the LBMA website. And I'll see if I can find. Yeah, I can't really seem to find. I have struggled finding the price on here. Actually, I don't think they have the price here. Let's see, City Gold Bullion. Yeah, so in Australia it's very expensive. For example, 1 kilogram gold bar, $81,348. That might be also because there's maybe more, some degree, more demand. So that's rather interesting. Yeah, I know I've seen it before. There's a website I do check from time to time. I can't seem to find it. That's not it. I checked it yesterday because I remember checking it about 2 days ago last time, and it was sitting at around $53,000, so it really had gone up. Why do I feel like it's this site here? Because I know I've clicked on it before. No, I think I might have used a different search term. Hang on. It's done in ounces. I'll have to probably do another search for it. Okay, this is really going to bug me because I know I've seen it here I've seen it at 53,000 per kilo. But I can't seem to find it. I can't seem to find the website that had it listed. Bummer. But yeah, look. Gold is an expensive product. And yes, it's basically yeah. So the LBMA, there is pricing somewhere for gold. That does vary, but some websites give you pricing in ounces rather than kilograms. In the world of international trade, gold is traded per kilogram and priced per kilogram. So previously, the last time I saw it was at 53,000 per kilogram for bullion. Doré usually is about $5,000 to $10,000 behind. So Doré would then be trading anywhere between 43 to 48. You might get Doré at around 40,000 at this point in time. Depends on the purity. The less pure it is, the cheaper it is. I guess some other points I could mention as well. A lot of demand for gold. There's a lot of generally like the demand for gold. A lot of it does come from Dubai. There is some demand for gold in Europe and the U.S. Some in Asia as well. But primarily there seems to, a bit in Africa as well. But primarily, and coming out of India. Sorry. But there's it seems to me the market generally, most people who want to buy gold are in Dubai. A lot of buyers there, and the rest are spread out across the other areas. I don't think I've yet come across a buyer for gold in South America. Sure there is though. Sure there would be though. None yet in sort of the Asia Pacific region that I've met. So I'm sure there probably are buyers in the Western, in sort of New Zealand, Australia, because there's a fair bit of money down here, but none that I've come across yet. So lots of demand coming out of the Middle East, particularly in Dubai for gold. A lot of refineries in Dubai as well, in the UAE. Because that's where a lot of buyers here do want to take it and then refine it and then turn it into bullion that will be worth more. Just thinking what else I can tell you about gold. There's definitely a lot of Doré in Africa. There's also a lot of scammers in Africa as well, so you do have to be careful when dealing in Africa, because Africa is sort of a continent that's still developing at this point. So there's still there isn't a lot of business. Still is, I believe, from my experience, business is still done rather informally there. So and with a lack of structure in their processes and procedures and governments, and because there's a little less stability, it's a bit more dangerous. And it's harder to trust people when doing business there. So although there is gold there and there are mines there, and there's quite a lot in Western Africa, one does have to be careful. Generally, the process for gold, what I can maybe cover is the actual process for buying gold. There is a bit of dispute as to how it started. Now, some suppliers will request an LOI, a letter which is a non-binding document stating the buyer's intention to buy a particular product. Now, the LOI stands for letter of intent. Now, there is some I don't believe it's an enforced legislation, but there is some type of guideline, or if you want to call it legislation or guideline. I would prefer to call it as a guide. I prefer to call it a guideline because it's not really to me at least, it doesn't seem to be a global legislation regarding the trading of gold. It doesn't seem to be an enforced law. It seems to be more a guideline on how it should be done. But there is a Swiss law or a Swiss guideline that gold, the process for the transaction of, the process for trading gold or buying and selling gold should be that the supplier should issue a soft corporate offer or a full corporate offer to the interested party. It apparently is apparently it's illegal for a buyer to issue an LOI to a supplier because it's considered soliciting. To me, I think that's just bullshit. I think it's just stupid. How is it soliciting? They are looking to buy. To me, that doesn't. I mean, I guess you have to look up what's the legal definition of soliciting? I guess if you want to maybe sit things. So soliciting is the action or fact of accosting someone and offering one's or someone else's services as a prostitute. So it's basically accosting somebody. So that's just ridiculous. If you walk into a shop, are you accosting somebody? No. So I'm not sure. It appears very odd to me that would be considered accosting, because generally with any other product you need a letter of intent, but with gold apparently it's not like that. Now I suspect maybe in Switzerland that's the law, so I suspect maybe that's those rules only apply to Switzerland and maybe Greater Europe as a whole. But in my experience, it's not. Those are not hard and fast rules. I have come across African buyers who follow that same sort of who do follow that kind of guideline, and who will just think you're a scammer if you tell them that you need a letter of intent. So. Yeah, not sure why that exists. There could be to weed out intermediaries or brokers in the trading of gold, but I don't think that's the case. It seems to me it could be a particular cultural sort of, what's the word I'm trying to find? It could be a particular cultural sort of. Something weird in Swiss culture maybe, that they think for some reason that an LOI is considered like bad taste or something, and so it's like illegal. So I don't think that's at all valid. LOI I think is fine to start with an LOI. It doesn't seem to make much sense to issue a full corporate offer to somebody who may not either be ready to buy, or maybe there hasn't been a full agreement on the terms yet. It sort of wastes the supplier's time, because the supplier then has to issue an offer. So you could look at it from that point of view from the supplier, but I don't think. I mean, look, you could. I mean, look, we can issue an SCO FCO first. That's not unreasonable. We do offer both. Because we will get some clients, of course, you might just say, look, now we want you to provide the offer, and that's fine. But so we're pretty flexible. But you need to get some sort of verbal agreement down pat in place before an SCO FCO, so you'd all have to agree on the price. The buyer would have to be happy with the purity, the payment terms, yada, yada, yada. And then you would say, okay, great, can we have your details? We'll issue an SCO. So, we are flexible in that regard, but we don't believe in this line of business that issuing an LOI, having an LOI issued to us is soliciting. So if the path of an LOI is taken, if the supplier looks at the LOI and is satisfied with the document, a supplier will then issue a SCO, which is a soft corporate offer. That's what SCO stands for. It's not a formal binding agreement, it's an informal sort of draft. So the buyer will then review the SCO. If they're satisfied with that, they will approve the SCO, and then the supplier will issue an FCO, which is a full corporate offer, and that is a binding document. And once the buyer has signed that, then the logistics begin on sending the shipment to the buyer's destination. That's usually done by a Brinks. Brinks, and if we look up Brinks, so this will be for you. So the Brinks Company is an American private security and protection company headquartered outside Richmond, Virginia. Its core business is Brinks Inc. Its sister brand, Brinks Home Security Company, operates separately and is headquartered in Dallas, Texas. Brinks brand and reputation span around the globe, but basically, yeah. So they are, although they are private, although they don't, this doesn't specifically say here. It is a private security company and protection company that is involved in the protection of gold transactions. So they are involved and will be involved and used to transact the gold from the supplier to the buyer. Assay testing is also done at this point if it's Dory. So someone will test the the buyer will test the quality of the gold to see that it's up to the standards indicated in the SCO and FCO. If that's fine, then they'll make the buyer's bank will pay the seller's bank, and it will be good. That's sort of fundamentally, in a nutshell, kind of what generally happens. Of course, it may not. Things can change. Not all processes are exactly the same, so you might find there's a bit of some things might happen the other way around. Generally, it's the assay, but generally you have assay testing, then an FCO. FCO, then assay testing, and then the shipment gets sent off. So that's how the transaction for gold occurs. I'm not sure that I have much else to say really about gold. I may end up making another podcast about this subject later down the line, as there are probably more things I could think about to add to the subject. But I think I've pretty much given you a good comprehensive overview about how gold is traded and its price, sort of the different organizations involved in gold, such as the LBMA, Brinks, things like that. Sort of giving you a general overview of the geography, so to speak. Yeah, I'd say that's pretty much about it for gold. Look, if you have any questions, of course, feel free to contact us through Facebook, Instagram, or Twitter with any inquiries, whether you want to buy or whether you just want to learn more. That's fine with us. On behalf of Alcandross International Trading, actually, before I do sign off, I will say that our next podcast, I think probably what I'll do for the next educational podcast is we'll definitely cover a different product. I think what I'll probably end up doing is, unless I can think of any others, unless I think of some more information about gold, then I'll do a second gold podcast. But I think I'll move towards copper scrap, such as copper millbury and cathode, which is quite a big subject. There's quite a bit more involved in copper millbury and cathode to cover. So yes, look, that's about it. On behalf of Alcandross International Trading, this is Konstantin Kai Alcandross signing out.